How do you do, guys? This is Muftar, OFGBFX. How you guys? How was last week? We had a couple of moves last week. I hope you guys were able to profit on that. Great. Before we start, I just want to share something to you guys this week. I realized people usually have like the same mindset. They rely on the same analysis from last week, yeah, and they want to portray it this week. But the market changed. There are movements throughout the week. So you don't expect most of the time the same thing you did last week to be what you are supposed to see this week. So what I try to do with that is I try to remain radically open-minded at the end of the week. So when I come in fresh, when I come into the market, the next week, I redo my analysis. I redo everything. I'm open-minded to any change. So that way you are able to detect or follow any changes you see on the chart. You are able to stay updated with the market. So when you come in a new week, try to forget about what happened last week and open a new chart. Restart, see what you saw, what you think you saw. Redo your analysis as if it's fresh. Redo it like you don't know what happened last week. Great. So this is Euro AUD. Euro AUD. I think that the setup is quite clear for you guys. So start from the monthly as usual. On the monthly time frame, you see it's bouncing off a 50% retracement level on the bigger time frame. So it tells us this area is a good resistance area. So when you go on the weekly, you can see that there was a bounce off. Now there's a little bit of consolidation. So last week I had something similar to a falling channel, something like this. That was what I had last week. But this week it has changed. I see more of a descending triangle at the right hand side. I'm sure you agree with me on descending triangle at this part of the chart. So the descending triangle, most of us know what a descending triangle is. A descending triangle is most likely bearish, should be bearish in nature. So when you break it down to the daily, you could see there's a bounce off here, bounce off here, bounce off back here. And the lows, what defines a descending triangle, you could see the charts, price making equal or almost the same low and a lower highs. So lower highs and almost the same lows. And that's what makes a descending triangle. So for me, that has changed. So I had an open mind to re-see what I saw last week. And that was why I'm here at the moment. I think I have what I have last week here. Let me just open it real quick. Euro on. So this was what I had last week. Can you see, guys? So basically, it's the same thing, but it's a different point of view to it altogether. So Euro odd. So what we'll be expecting this week is a pullback. There might be a break of this trend line. Say descending triangle. So in a descending triangle, you want to be selling. That's how you've discovered the trend. You say the descending triangle and you say it's bearish. So most of the time, what you want to do is selling. So you could see from the price action we have all through here, you could see the bearish candles are, the momentum on the bearish candle is very strong. So that should give you clues on where each part of the market should be. So I want to be selling, but I want a good price. So I might wait for a retracement to the upside to this level. Let me just pull out. So I'll wait for a retracement to the upside to this level to see if I could go in. So when this presents itself, my setup might come online and I go in. So you want to sell to this level first of all and see how it goes. But if it breaks up to the upside, you have to reevaluate your analysis. So you have to get your So you have to get your analysis in place. I think my microphone is just shaky. You have to get your analysis in play. So basically, you're waiting for a retracement to the top side before we do anything on this pair. So to be on the good side of the market, I want to see that happen. So if it breaks up, you are looking for a retracement. If it breaks out of this triangle, of this sort of head and shoulder pattern, you might see a continuation down to the downside over here. Then after that, it might even continue further to the downside more. But first of all, let's focus on this first move. Then later on, hopefully this happens. So we want to focus on this first move now. If this happens and down, most likely the market could open next week and it breaks down straight up. Don't chase it, don't sweat it. Look for another opportunity. So that's the Euro odd. Let's go pound NZD. Pound NZD also, there you could see basically very clearly there's a chart pattern here. It's clearly a channel, a rising channel. So there was a bounce off on the bigger time frame, bounce off, a double bottom, left bottom, right bottom. We know what a double bottom is, the reversal. It's more of a reversal chart pattern, so to say. So after that double bottom, we had a double top right here. Double top is also a reversal pattern. So we are basically determined where this chart might go. So we're saying it's going down. So breaking it down to the daily time frame, over here we could see that there's a over here we could see we have like an head and shoulders pattern. That's playing out for us over here. Head and shoulders pattern here at the low. So this might happen if it breaks down at the open. If it breaks down, we might see this level at the open. But if it doesn't, for me, I would want to wait for it to retrace. If it does retrace, this whole move. If it does retrace this whole move, I want to see it come down here. So I'm waiting for a short at this level. But if it breaks the neckline of the head and shoulders on the daily time frame, we might see that down move. And if you trade head and shoulders, fine. If you don't, fine. So you need to know your setups. So for me, I wouldn't be taking that because that is not the kind of trades I take. So basically, guys, I think that's the pound NZD in a nutshell. So let's do the Euro New Zealand dollar. So Euro New Zealand dollar last week, I mean, the same thing happening. Nothing has actually changed. So we have top. That's triple top right here. First top, second top, third top. Triple top is the reversal pattern. So we break it down to the daily time frame. You will see we've already marked our higher reversal zone, supply zone over here. We already marked it. Supply or demand zone, sorry guys, demand zone. So breaking it down to the daily time frame, you could tell this has been trending for a while. There we have a trend here for a while. So now this is in a little range. For smaller time frame traders, you'll have gotten inside the trend basically. But if it breaks down, we should be looking at this to the downside. Right, but if it breaks up, I'm sure you have your stop losses. So this should give you a normal 1:2 risk to reward ratio. Right. So basically the trajectory for us is a down move, basically, throughout. So we are bearish on this. So this is a reversal zone, guys. So Euro New Zealand dollar for you. The New Zealand USD. The New Zealand USD also, if we take out you could see a double top. Obviously, if we go on to the bigger time frame still, you would see that we have a very good 61.8 level holding just right here, still holding, still holding, still holding. Last week I put up a little bit of ascending triangle over here, but that structure has changed, so you have to change the market also. So this here, I would it would be nice if it does a retracement to the upside before it comes back down, because when you break it down to the smallest time frame, which is the 4 hour, which I trade, you could easily see a heads and shoulders, an inverted heads and shoulders, which has not yet fully formed. So it might play out. If it does play out or reverse, you might see a reversal here, but hopefully this supply zone is going to hold it down. Then we'll see a downside from there, right? But hopefully that is what I'll be waiting for. But it could as well at the beginning of the month, at the beginning of the market, at the opening of the market, break straight down, and the heads and shoulders pattern will be nullified. So we'll basically be waiting for those two scenarios to play out and see how best your strategy fits into that strategy, into that style of trading. The pound USD, same thing, demand zone. This is the weekly. Is at a supply zone here. There was a break. Sellers came in on the bigger time frame. So let me break it down to the daily. Sellers came in. There was a retracement of this zone, a pullback to this neckline. This is a very good heads and shoulders pattern. Sellers came in, on this level, pulled prices down. Buyers came in at the neckline. They don't want prices to go further from here, but the sellers are much more resilient than the buyers at this price level because of this very huge demand. So there's a lot of sell orders, a lot of bids at that price at this particular range. So for me to have a good risk to reward ratio, to enter any trade at this point, because of the swing trader that I am, I'd like to make to see this retracement to this level at least. So for me to have like let's say 130 pips stop loss to like 600 pips. That's like 1:4 risk to reward ratio for me. So I'll be looking forward to that next week. The pound, there's a pound USD. Let's go to the brother of the pound, the euro USD. This was last week's analysis. The euro USD, this week's analysis basically is similar to last week, but last week has more drama in the there was a lot of red lines, trend lines in the chart. So the euro USD for this week is quite simple. It embodies whatever we did last week, but in a more simplified way. This is a very good. There's a very good demand zone, a very good supply zone. Sorry, 61.8 in between 68 and 61.8 level, and sellers came in on the bigger time frame. So we break it down, and we expect a retracement. This retracement to end around here. If you pull our Fibonacci retracement tool, you could see this is the level we want it to come to. So break it down to the daily pullback, continuation pullback at this same level. You could tell you is a very strong level. So this is a neckline for this pattern here. So there would be a test of this neckline. If this neckline breaks at the end of at the beginning of at the opening of the market. If this neckline breaks, we could see a sell. Sellers come in at the break of the neckline, and hopefully I'll be looking to buy from here first of all. So it's a good demand zone for me to buy. Um, but if this decides not to hold, if this decides to hold next week as the market opens, we might see a retracement to this upside. When it comes to this upside, you should be looking for a short to the downside also to this level. So it might be a very, very, very good week for us next week. So always apply risk management, guys, and don't get overconfident at any point in time during your trading. You as the chef, I think played out very well from analysis last week. You as the chef, so be careful, guys. The retracement is almost over. Last week it was around here. We called it and it sold to the downside, but almost hit the target. So hopefully we'll be seeing very little retracement. What do they call it? Distributive patterns. So you see a lot of consolidation around this level. I won't be trying to trade at this level. I just wait it out. But for those who trade, this is a very good demand zone, a very good supply zone for you to get into this trade. So when we sell here for a double top, we might get a continuation to the downside, then from here to the upside. But you should make sure your stop loss is at the upside. So when it breaks, or when this breaks, it might retest this trend line. Might be a retest of this trend line before it comes down or even goes up. But until then, we'll see what happens. So that's what we'll be looking out for in the USD chef this week. The last one for this week, the Aussie dollar. The Aussie dollar is also quite the same thing. It's bringing out the same pattern with most of the other pairs. So the Aussie dollar is in a range, an upward range, a bullish range. So and there was a breakout at this level here. There's a breakout over here. At the same level of breakout, you see there's a very good supply zone. That's a resistance right here. So when we bring our Fibonacci tool, we could see that that resistance is coupled with a lot of lines. The resistance here, and it's also a double top because the left top and the right top. So sellers came in. It was a very tight supply zone. So sellers came in, brought prices down. Prices might retrace. Last week we expected it to get here, but it didn't get there. So this week it might continue to sell. It might break the neckline of the head and shoulders pattern and even continue downwards and break this range. But I'll be waiting for it for a short. For me to go into a short, I'll be waiting for a retracement to the upside. To the upside, this place right here. When you bring out Fibonacci, you see the 61.8 level. A very good zone for me to get it for a sell, really. So I'm waiting for that to get into my short. So whichever style you fit in, you can actually, you're a smaller time frame trader, you can do your analysis on the smaller time frame. The way I do it is quite pretty easy to do analysis. You should be able to tell your story. So this should give us a very clear picture of what we're expecting next week. Expecting this to play out, break out of the neckline. When it breaks out, this range, the lower trend line, when it breaks the lower trend line, we should be looking at here. The opposite can happen. This might as well do this, go upwards, and I mean, the law of gravity is applying in this trade right now. So guys, if you have any questions, anything to follow up, any suggestions, kindly just like, subscribe, leave a comment below, and I'll be in touch, guys. Take care.